So there's nearly a 37% decrease in number of Australian first home buyers in January 2023 compared to what there was in January 2022. Australian Bureau of Statistics has released that January 23 saw just under 7,000 first home buyer loans established, totaling just over $14 billion. To give you a visual of what that looks like, January 2022, there was over 11,000 loans established for first home buyers, totaling over $22.5 billion. Interestingly enough though, December 22 quarter saw only a 3.3% drop in average Australian property value compared to December 22 quarter, which brought the average Australian dwellings value down from $928,500 down to $898,100. Obviously there was a market boom in there, but if you look at it on value of year to year and just take that into consideration, we've only gone down 3.3%. And now if you look at it over a 2-year basis from December 20 to December 2022, you can see that the property market's seen an incredible amount of growth still. So what's happened to our first home buyers? Well, the demand is still there. Bank of Queensland have just released that 33% of people surveyed are saving for a house right now. So between the cost of living increase resulting in less savings and the 10 consecutive interest rate increases, people's borrowing capacities have gone down and so have their deposits. But as we've seen before, the amount that people are spending on their houses hasn't gone down so significantly. A massive thing to look at for first home buyers is construction. First home buyers, typically, especially over the last 2 years, have veered towards building their first home because of the fact that you can do it or have been able to do it for such a low deposit. To put in perspective, there was a point in 2021 where you could build a $600,000 house for around a $12,500 deposit if you went to the right bank. Now you combine incredibly low deposits required and incredibly low interest rates to give you good servicing, you can see why a lot of home buyers were running towards construction. But due to a variety of reasons, including cost of living, cost of materials, interest rate increases, and redundancy of the home builder grant, the construction industry has taken a pretty significant dip. So with established properties becoming the primary focus again for first home buyers, that means that you need more money to get into the industry than what you did 1.5 to 2 years ago. And as you saw before, that's resulting in a pretty significant drop in first home buyers. It's also worth noting that first home buyers struggle a lot more in these more competitive markets because they don't have, as we said before, the deposit available, they don't have equity available from their other properties, and they don't have typically as much competitive income to put their offers down and get to where they need to be with the price expectations. We've already seen the government/OSR start addressing this problem by reviewing the first home guarantee. I'll talk about the first home guarantee in another video, but it's essentially paying $0 lender's mortgage insurance on your first home, which can dramatically decrease the deposit that's required to purchase your first home. As of the start of this financial year, we've seen an increase in scheme availability for the first home guarantee to 35,000 spaces, and we've also seen a huge increase in price thresholds for properties available for the scheme. So with first home buyers still being so hungry to get into the market, I think it'll just be a matter of time before they're more prominent buyers again. I think we'll be waiting for either interest rates to go down to help with their servicing of loans, to wait for property price expectations to go down to help with the deposit that they need to get into property, for either the construction industry to come back and be more dominant in the scene, or for grants to be reviewed and make it more attainable for buying first homes. But we'll see how everything plays out. That's my opinion.